Oil under pressure right now after Israel's retaliation attacks on Iran avoided any key oil and nuclear sites. So this perhaps makes a disruption to oil supplies less likely. Excuse me. We are joined now by Andrew Lipow, president of Lipow Oil Associates. Andrew, thanks very much for coming on the show. So they didn't go after oil targets. Reportedly, the Biden administration asked them not to.
Well, I think that's exactly right. I think that Israel was concerned that if they did hit the nuclear or oil facilities, that could really widen into a much bigger regional conflict, sending oil prices soaring, not only in the U.S. prior to the elections, but around the rest of the world, impacting the Chinese and Indian economies.
And of course, Israel, well, for public consumption, says we'll do what we deem fit. But interesting, yeah, because it would have been awkward for the Americans, wouldn't it, just prior to an election, to see the gasoline price go up, for example.
Well, I think that's certainly been a consideration, and it does show you that there is some behind-the-scenes negotiations between the United States and Israel going on. But, you know, this is just the latest chapter in this ongoing saga that's happened over a year ago, and there is no telling what Iran might decide or decide not to do in retaliation for the latest Israeli strike. And then if Israel would then step up with another strike back on Iran.
Yeah, some of the yeah, exactly. It's a moving target right now. How Iran is going to respond. You say that oil investors should be wary, and there's unlikely to be a significant rally in oil prices this year.
Well, that's right. Now that we've seen over the last year, there has been no oil supply disruption given the geopolitical events in the Middle East. The market is now turning back to the fundamentals of oil supply and demand. And on the demand side, we've seen weakness led by weakness in China with very paltry growth this year due to more electric vehicle automobile sales, as well as the truck fleet turning to LNG, dampening demand growth. At the same time, you have record oil production here in the United States, as well as the usual increases in Canadian, Brazilian, and Guyana oil production, but now we have additional production coming online next year out of Argentina and out of West Africa, out of Senegal, which is really putting OPEC Plus in a bind, given that they have so much spare capacity just waiting to hit the market. You say it's somewhat ironic. Mr. Trump obviously he's talked about lowering energy prices, but if he regains the White House and he clamps down in terms of sanctions on Iran, that could push up crude prices. Well, it certainly can, and especially as Mr. Trump has been out on the campaign trail saying he's going to lower the consumer's energy costs by 50%. For crude oil, that means a drop in oil prices of around $50 a barrel. But at the same time, we know that Donald Trump has thought that the Biden's sanctions on Iran, or actually not paying attention to those sanctions and letting Iran continue to sell their oil, has been a disastrous foreign policy, and he might try to shut in Iranian exports, of course, boosting the price of oil.
Just in terms of demand in China, we know electric vehicles are remorselessly taking a bigger and bigger market share. And you say PetroChina actually is going to close a processing facility?
Yeah, that was just reported by Reuters over the weekend that PetroChina is going to be shutting down one of their largest oil refineries, about 400,000 barrels a day, after they shut down a few others in 2023 with a couple 100,000 barrels a day. So you can see in China, although we have had brand new large-scale refineries coming online, on the other side of the equation is they're shutting down some other refining capacity given their demand growth profile is slowing down.
What about India? I mean, I know that's a nation of 1.4 billion people. Is it clear that India's oil demand will rise relentlessly in the decades to come?
Well, I think certainly in the next 5 to 7 years, Indian oil demand is anticipated to rise by 4 or 5 million barrels a day, just given that the potential for so many additional cars to get on the road, construction and economic activity would drive that increase in demand. We have seen Indian energy ministers announcing that they would like to build about 4 to 5 million barrels a day of refining capacity to meet that demand. But once again, you need the financing for these mega projects, which cost in excess of $10 billion to come on stream.
And in countries like Vietnam, apparently, there has been a wholesale switch to electric transportation. I mean, these electrics are formerly gas-powered scooters, more and more electric vehicles.
Well, we're certainly seeing that, especially in Southeast Asia and here in the United States to a lesser extent. And that, of course, puts more pressure on oil prices as you go forward. And as I remarked earlier, this puts OPEC Plus in a bind because they have over 5 million barrels a day of spare capacity that they'd like to see reach the market. But they know that they can't flood the market today with oil prices already nearing $70 a barrel for Brent, and they have their domestic budget concerns to worry about.